Alrighty, I'm looking at gold here. I wanted to talk a little bit about it. Gold, I honestly don't have a high conviction about gold on whether it's going to go up or down. This video mainly is about a gold ETF I found that I wanted to talk about. I did want to briefly touch on just my opinion on gold real quick. When I think of gold, and when most people think of gold, what do they usually think about when buying into like a gold ETF? Well, they're usually using it as a hedge. Most of the time it's a hedge against the overall market, or the other time it would mainly be because they're using it as a hedge against inflation. If that's my view, is that gold is a good hedge, well then this is a good opportunity to get in it. And if my view is that inflation is going to happen, then this is also a good opportunity to get in this commodity. So that's going to be my kind of fundamental analysis of this. I'm just going to keep it real simple, and you're going to want to enter this play, like I said, if you're bullish on gold. So I wanted to now talk about why I'm talking about gold. It's not because this spider ETF, it's because I found at ETF, the tickers is GLDI. I is in Ivan. And what this ETF does is it's actively managed. All the time and management it takes to run covered calls, they take all that out and they actively manage that for you. So they run the covered calls for you, and all you got to do is just buy shares. So this is a whole lot simpler process. You can just buy shares and then sit and forget about it. And so, okay, so what happens is they give you a monthly dividend here. Usually the dividends are about quarterly. And the overall dividend, instead of the theta, they give you, instead of the theta you would make from the covered call, they give out that in a dividend. And the overall annual dividend rate is like 15 or 16%. It's crazy. So for every share you buy in here, which is about $9, they're going to give you $1.50. And so if I buy 100 shares in this, then I'm going to get about $130 around that annually, just for holding on to this. And if you look, just a quick chart analysis, like I said, gold has really dipped down. If you look at the gold spider chart, it's really dipped down to a great level to buy from if you're just looking at purely at the chart. And here it's got a couple support lines that pop out to me, and this is a good buying opportunity on here if you're wanting to get into this. One final note here, the reason why I think this is superior is because gold is a slow mover, and when you're dealing with a slow mover, like in my previous videos, I'm talking about value stocks and running poor man cover calls, on those, and that's because those are slow movers. When I'm talking about Walmart or Procter & Gamble or Coca-Cola or whatever it is, these value stocks are slow movers, and you don't You can buy a bunch of shares in it, but there's not high upside to it, so you're looking for something that's going to capitalize off that time decay. Same thing with gold here. If this goes back up to 10, it's probably going to take like a whole year. And so that's a really, I want to capitalize off that slow progression upwards. And this ETF is really going to do that for me since they're handing me dividends. Now, really quick, the downside, obviously, of this is, since they're running cover calls, there's going to be limited upside potential to this. I mean, if I run over the gold ETF, I can compare it to this real quick. See this orange line is the gold ETF. As you can see, there was a big separation right here, and that's the potential upside you could lose by following this ETF. So you're going to have to weigh that out. But overall, I do think this is a good decision if you're trying to get in gold. It pays out a great dividend. It's a good hedge against the market. The market's sitting at all-time highs. Everyone's always antsy if it's, since we've had a super big run up. So this is just something to think about, and let me know what you guys think. I just thought it was super interesting, and appreciate it.